All savvy investors know exactly what they're investing in. And it's crucial that you can weigh the risks and the rewards of different investments and different investment types and what's going to drive that investment success down the road. If you don't have that kind of information, you can't make those kinds of calculations. And in that case, you're not really investing anymore. You're really more gambling. So today on Renegade News, we're discussing the differences between stock and crypto investing for beginners, along with the pros and cons of each, so you can figure out what makes the most sense for you and for your goals. Welcome back to Renegade News. I'm your host, Glenn Kowalski. Every week on this channel, you hear the latest news, strategies, and tactics for breaking free from the system, paying less tax, and living anywhere in the world you want. So let's jump right into it. If you're going to get into buying cryptocurrencies, it's really important that you understand what you're actually buying and how investing in crypto compares to traditional investments like stocks, which obviously have a longer term track record. So there are a few things that you need to know about stocks and cryptocurrencies first. This is going to be a review for a lot of you, but we're going to get into it anyway. So what is a stock? Well, a stock is a fractional ownership interest in a business. And so you have this legal ownership stake in the business, and that gives you as a shareholder a claim on the assets and the cash flows of the business. These assets back your investment, and they provide the basis for the valuation, at least in theory. It rises and falls because the investors are assessing the future success of the company. And ultimately, it depends on the company's ability to grow its profits over the long term. So for a stock to be successful as an investment, the underlying company must perform well over time. Cryptocurrencies are a little bit differently. Generally, the cryptocurrency is really not backed by any type of hard asset. Like if you look at Bitcoin or Ethereum, there's no hard asset behind it. And a cryptocurrency may allow you to perform certain functions or have utility, like sending money to another person or using smart contracts that automatically execute. But they rise and fall slightly differently because they're not backed by these assets or the cash flow. The only thing that's really driving the prices in crypto is the speculation that's driven by investor sentiment. And as that sentiment changes, the prices can shift, and sometimes they can shift very dramatically. So for a cryptocurrency to be a successful investment, you must get someone to buy it from you for more than you paid for it. Now, speaking of Bitcoin, if you're ready to start learning about Bitcoin and cryptocurrency, but you don't know where to start, check out the link at the first pinned comment. We're offering a quick start action plan that will have you buying, selling, and trading Bitcoin in less than 74 minutes flat. And by the end of this short training, you're going to know more about Bitcoin than 93% of the world, and you'll actually own some. So obviously, crypto and stocks each come with their own set of pros and cons. So some of the pros of investing in cryptocurrency is that they can act like this hedge against fiat currency. And for some investors, myself included, one of the biggest appeals of cryptocurrency is that it's decentralized by nature. It's not controlled by the central banks or by the governments who like to print money and who like to generate inflation in fiat currencies like the US dollar or the euro. Cryptocurrency has been called digital gold by some investors, and I like to think of it that way. And I believe that eventually, ultimately, long-term, it could protect us from inflation because it's a better monetary asset. Now, there's also the potential for a really big gain on your investment. There's been several currencies over the years that have seen their prices skyrocket since they were first introduced. One of the cryptos that I've invested in, Pirate Chain, I bought around 5 cents. It shot up to $16 before dropping back to around a couple bucks today. But there's obviously some huge money that can be made in those opportunities. And those gains are the main reason that people are attracted to cryptocurrencies right now. In the future, that could change as they even out. But right now, the promise of big profits is the main driver. But that potential for huge appreciation obviously comes with some significant risk as well. There's also this growing number of coins. Back in the early days, there was just a couple of coins that could be invested in, but the speculative interest that crypto has generated has changed that. And now new coins are being introduced regularly, and there are thousands of different altcoins that you can actually choose from. There's also this growing interest in cryptocurrencies and in digital currencies from investors, companies, and even the government. And that's a good thing because that's driving the market, but it can also be a bad thing, especially when you look at digital currencies that aren't decentralized like the banks and the government want to introduce. Now, some of the other cons of cryptocurrencies is they are extremely volatile. And so far, because they're so young, they're more volatile than I expect they'll be in the long term. And because they aren't really backed by assets or company like stocks are, the trading value is really determined at the whim of the traders. And that means that fortunes can be made and lost extremely quickly. And there's really no telling where a coin might trade next. You really have to do your due diligence on that. Next, there are cybersecurity risks. And despite the cryptocurrency enthusiasts like myself that are talking about the security benefits of digital coins, there have been some notable hacks involving cryptocurrencies. Now, generally speaking, those hacks aren't on the blockchain or in the cryptocurrency themselves. They're happening on the exchanges. And those same attacks are possible in your traditional bank account. But because of the thousands of coins that are available and the wide variety of exchanges, they do tend to be a bigger target for hackers than banks are. And very often, because they're not FDIC insured, it can be very difficult to recover the funds that get stolen. Also, as we kind of alluded to earlier, there's no intrinsic value to the cryptocurrency itself. They're not really backed by any type of underlying asset or real earnings the way that stocks are. Their value is more based on what investors think their utility is going to be in the future. There's also regulatory risks. And while a country like El Salvador has embraced Bitcoin, many governments are much more skeptical about the cryptocurrencies, and places like China have banned them altogether, and other countries could follow suit, making them more difficult to use, especially if you really care about the regulatory environment. Now, stocks, on the other hand, they've been around for a long time. And that's one of the pros of investing in the stock market, is they have this long track record of producing solid investment returns. The S&P 500, for example, has returned about 10% per year over the long term. Now, stocks can still be volatile in the short term, but they've generally been safe to hold over long periods of time, at least up to this point in history. That could change in the future. Stocks also have an intrinsic value because they represent an ownership in a company. So that company's value, its value over time depends on the success of the underlying company, and companies own assets, whether that be equipment or patents or other assets. And all of those things can go towards producing the earnings and cash flow for the investors, and that creates that intrinsic value. Next, stocks are extremely accessible. It's very easy these days to get involved in the stock market. There's so many new online brokers that are popping up. The trading fees are dropping down to nearly zero. You can invest in individual stocks anytime you want, or you can choose to buy a diversified basket of stocks through something like an index fund. And the index funds help keep the cost low and let you build a diversified portfolio almost automatically, even if you don't have a whole lot of money to start with. Stocks also have stronger regulation than the cryptocurrency industry, and this can be both a good thing and a bad thing. In the pro side, the stock exchanges, the brokers, and the companies are all really heavily regulated through the various government agencies. And now companies are required to provide certain information to the investors through the Securities and Exchange Commission. And that, in theory at least, gives a certain level of protection to stock investors. Now, moving over to the cons of investing in stocks, stocks can still be volatile. I mean, when you hold a broad basket of stocks through index funds, they're less volatile than cryptocurrencies by far. And individual stocks, which are more volatile, are still typically less volatile than cryptocurrencies. Because of the volatility inherent in stocks, just like in crypto, but with stocks, they're best held as part of a long-term investment plan. And as long as you're investing in solid companies, you have time to recover from any short-term losses that way. However, because of this, there's much lower potential for big gains. Big stock indexes like the S&P 500 have way less potential for the extreme gains that we're seeing in the cryptocurrency industry. Stocks over time have returned about 10% over the long term, whereas in cryptocurrency, it's not uncommon for a crypto coin to move 10% or even more in a single day. So that shows that there's so much more potential both on the up and the downside. Also, as we mentioned earlier, there's heavy regulations in the stocks. So the state gets to tell you when, how, with who, and how much you're allowed to invest. And Big Brother is always watching you and knows exactly what's going on in your stock portfolio and in your bank account. You have no privacy and no autonomy because all of this is completely controlled. So the bottom line, some cryptocurrencies have really soared in price since being introduced over the past few years. But investors do need to understand what they're investing in instead of just rushing in because other traders are jumping on a coin. And if you decide to take a stake in a crypto, consider how it fits with your own risk tolerance and your financial needs. And always make it part of your overall personal, financial, and location independent strategy, because that strategy is ultimately what's going to give you more freedom in this unfree world. And that's also why you should subscribe to our channel right now, so you're always kept up to date on the latest freedom and liberty information available. And while you're at it, and while you're here, check out the video you see on the screen right now for more information on the best places to live, the best places to start a business, Bitcoin and cryptocurrency, and so much more. I'm Glenn Kowalski from Renegade News, and I'll see you over there.